Yeah, I usually record these. I completely forgot. From here on, whatever we talk about will be, I'll post it on the internet later. It'll be on my YouTube for anyone that wants to rewatch. And thank you for reminding me. I usually do record these. But essentially, again, you have a supply, all this inducement gets built, price comes up here, grabs the inducement, moves down. And it just happens over and over. And the idea is if there's inducement there, the supply has a chance of holding. If the inducement is gone and there's nothing there, so for example, let's see if we can find one here. Like anywhere you look, the idea is, hold on. So this was, again, you had a supply inducement. So the idea was there was inducement here. Now, how'd we grab this inducement like we did? And if we came back and did this, the next time price comes and tests this supply, the likelihood of this supply holding is a lot less because this inducement's gone. We use that as fuel to go down. So once inducement is taken, if new structure is created, if price comes back, then the inducement's no longer, it's no longer there. So basically meaning that POI has less of a chance of holding, if that kind of makes sense. So is the inducement where most liquidity is sitting? So inducement to me is liquidity that an OB drops. So this to me would be liquidity. This to me would be inducement for this order block. So inducement is essentially the liquidity for an order block. So there's inducement here. I know if we came tapped here, there'd be a high probability this order block would hold. It's with order flow, there's inducement. Now, if price did something like this, but it didn't quite tap the order block and it went like this and all the inducement was taken, the next time we come back to that order block, the likelihood of this holding is not very high and price will likely go like that. Let's see, can you explain flips again? What's the difference between chalk and flip? So a flip is essentially, this is your, a flip is essentially, this is your supply. This is your demand that took control by breaking supply. A chalk, on the other hand, usually, hold on. So this would be a proper chalk here. You had a point, whoops, hold on. So you had a supply, you took the lows by coming down here, and then you took the highs. So this would be a chalk complete. And then you came up here and you never revisited here, but essentially a chalk takes the highs and the lows or the lows and the highs. A flip is, this is a flip right here. You had basically supply and control, then you came through it. And I wouldn't say this here swept the lows because these lows are still intact. So this is no chalk. This is just a flip. Whereas this is more of a chalk. And what I look for is a chalk inside a 15-minute POI. The 4-hour EU candle from September 28th. That's a clear sign of inefficient PA. So theoretically, price pulls back to the OB. Is that the idea? Let's have a look. Or not that one. It's actually 4-hour. Where are you here? September 28th. Do you want to annotate and show me exactly where you're talking about? Like, I don't personally use inefficiency or imbalance that much because, like, for example, let's see, anytime you have an imbalance, there's usually momentum there with it. So then I'll start looking at what created the move, and if there's inducement in front of it, As far as whether there's an imbalance or not, I could care less. I don't use imbalance one bit. I don't look at the charts at all. If there is imbalance, like I did when I started, and I just realized it's a complete waste of time and you don't need it. Imbalance just means essentially you had momentum going that way. If you had momentum, you could start looking at, is there inducement? Is there liquidity? Was there a sweep? How did price form? How did the bottom and the high form? Should price revisit here? Is it in discount or premium? If all of these things align and price should come back there, I don't care if there's imbalance there because everything else says it should come back. Yeah, no worries, man. Sometimes Zoom's kind of shitty with sound. Today, price reacted from the 15-minute POI right, the bearish one, but something is holding it there. Can you discuss that? I got to break even after partials on New York. Are you referring to this 4-hour OB holding? Because if so, you got to remember 4-hour is bearish, and I don't know how much volume we get on Friday. Fridays are usually never a huge amount of volume. The biggest influx of volumes Tuesday to Thursday. That's why they say Tuesday to Thursday is your biggest trading. The only time I see huge volume on Fridays if there was like huge news like NFP. So next Friday, I obviously will expect the markets to move. Like the markets moved today, but if you want to look up volume today, I'm willing to bet it's lower than it was Tuesday to Thursday. But you got to remember, daily's bearish, 4 hours bearish. So this has got a high probability of staying intact. To be honest with you, I was hoping we'd break through and come and tap this 4-hour EQ. I just don't know if Friday had the volume. And what might happen is they might do this for a day or two, collect the amount of orders they got, then go this way or go this way. But I'm guessing they're parking price to collect more orders, because it takes them a few days to get the orders they want to have. You know, I don't know what lot sizes they use, but I'm sure some of these institutions are trying to acquire 100,000, 200,000 lots. So that takes a few days. But as far as your 15-minute POI holding, it wasn't the 15-minute POI that was holding, it was your 4-hour, and it's just 4-hour order block holding that's with order flow. I was hoping it would break today, but like I said, I just don't think the volume was there. Hopefully that kind of makes sense. I do expect a bit of a retracement from this. Obviously, can't predict the market. I just react to what happens, but ideally I'd like a retracement to the 4-hour EQ. That's usually a good go-to. But yeah, I hope that kind of makes sense. Does anyone else have any questions? I think a lot of people get confused by flips because of the name. Flips are nothing to be afraid of or anything. It's just either supplies in control or demands in control. And where was the point where one lost control and the other one gained control? You know, I get where you guys are coming from, and I think a lot of people advertise it bad on Instagram too. Like a flip is not absolutely everything you need. A flip just lets you know where supply or demand lost control. Best tip to get the right major zones and not get the minor ones. I honestly look for pricing. So in my case right here, today, if we look at it, we had price impulse up. This is the high. This is the low. This is the equilibrium. And if we go back to my 1-minute chart, I actually deleted it by accident, but let's just do this. We'll go equilibrium. And let's see, 15-minute EQ, perfect. So now if we go back to this, if we look where price tapped into, it was actually a demand. And where did that demand come into? Right into discount. So it doesn't always play out, but I always try to find POIs. Like if I'm trying to buy, I want to find POIs in discount. If I'm trying to sell, I want to mark POIs in premium. The only reason I executed off of this POI here was because we had created a range between the supply and the demand, and I seen all this inducement. But if you're ever waiting for a move, you want to be selling from premium, buying from discount. And most of the time, that'll get you on the right side of things and make sure you're not overpaying for a position. But for myself, I like to see some sort of inducement, and I like to see some sort of a momentum from the POI. When I say momentum, if I look at this POI here, look at the size of the candle that left, and then look at the next candle. There's some momentum that came out of here. If we look at this, the candle gets engulfed. There's some momentum. If I go look at this POI on the 1 minute, hold on, what time is that? 1:45. So that's the previous day. Just hold on. Yeah, we'll talk about that in a sec. I always just look at like how long did price stay there? How did price form? Okay, everything got swept. There's no equals here. Once price tapped into the initial flip zone, because you had a flip here, this is the demand that caused it. It came to the original flip zone, and then price rocketed. So always look at how a bottom forms, and that to me helps me pick POIs too. The next thing I look for is if the POI swept liquidity. So this right here, I actually had this marked earlier, but this is a good demand zone because it swept liquidity. You could even argue that this was the starting point of momentum. So either one of these would be a good POI. And we're always just looking for that momentum to know that the institutions are in the market. And it's not always there, but if the momentum's there and you're getting engulfing candles, you're getting wicks. Wicks are a good sign that the institutions are present. And usually if the institutions are present, you can start formulating the idea of there's momentum here, there's wicks here. This could be a protected zone. So again, if we just even look at a supply here, how did this supply form? The bullish candle up gets completely engulfed. How did it get engulfed? Well, we got a wick that completely swept all inducement. Then we get momentum that makes new structure. Is this POI likely to break easily? Probably not. We had to take a run at it, and then we had to build some more lot sizes. Then we had to sweep all of this inducement. Only then did we have enough force to break through this because this was a strong supply. What time frame do you analyze premium discount for day trading? I do it on all time frames as far as premium and discount. Your most important ones are 4 hour and 15 minute. But if you, so I have my daily EQ marked, so that's my long-term target. So the way that works is once the 4 hour, at some point the 4 hour will retrace. And I'm going to start looking at, well, where is it possible that the 4 hour wants to go? And what I'll do is I'll kind of target this daily equilibrium. Once the 4 hour has hit the daily EQ, I can say that my probabilities of buying here become lower because daily is bearish. On the 4 hour side of things, it's the exact same. So our 4 hour equilibrium from this leg, and I'm pulling this leg and not this little leg because price never came into here. And we just had sellers in control here. So now if the 15 starts coming up, where is it safe to buy 15 up to? Well, at least here. And then if it keeps going up, well, where's the next target? Well, I imagine the next target would be the daily equilibrium. And that's kind of how I look at pricing, premium versus discount. I use the time frame up above to tell me where that time frame could go to. So the 15 minute, I'm going to look on the 4 hour where it should go. The 4 hour, I'm going to look on the daily where it should go. I don't really get too crazy on the daily. I just try to figure out if we're in pro daily phase or counter daily phase. And obviously, your highest probability trades are always pro higher time frame. if that kind of makes sense. You're just trying to figure out if you're in the retracement phase or if you're in the pro trend phase, because the higher time frame trend usually wins. But being on the lower time frame, if we take this high and 4 hour closes and then it makes another high, now we got two highs. 4 hour now becomes confirmed bullish. And from that point, we can basically make the assumption now that we're confirmed, price will likely continue to equilibrium. And then at the same point, once if it decides to break this low, now we can confirm that this low is weak. It failed to run this high. So we will start aiming this, aiming for this low because it failed to put in a new high basically. So that's how I look at premium and discount pricing. Do you use breaker blocks? Yeah, I do. I do, absolutely. And they always react. So here's a good example. I know for those of you guys out of Phantom, they don't, they're not big on it, but I do use them. They do work. Even if you don't take a trade off of it, pull it because you will get a reaction there. Breaker block basically is the lowest point before the highest point. So if you get a clean push like we got here, there's no order blocks here. But if you look to the left, this was your last sort of demand that put in the high. So because you got a clean push, you'll pull this zone as a breaker block and it reacted to it. So again, you have a low, you have a high, you have a clean push, you pull this across as a breaker block. So it's a sort of, so basically this demand becomes a supply when we get over here. This supply holds and we can form sells off of it. They work, test them, pull them across, and ultimately just be smart about your trades, right? I don't just enter on something because it's a POI, pull your POI, and essentially you want to see a chalk and a flip. If it's counter trend, even wait for, you know, two supplies or demands to break. If it's pro trend, usually just a flip's enough. All depends what kind of scenario we're in, depending what kind of pricing we're in. If you set yourself up with all these rules and you ultimately wait for everything to line up, you can formulate pretty high quality trade ideas. Like my trade ideas were good today. I just got a little greedy on my stop losses, and yeah, they were 16R trades, but had I given them each an extra 0.2, 0.3 of a pip, I would have hit probably 12, 13R in the day and they would have both ran to target. What do you prefer most, back testing or forward testing live? So back testing teaches you to see the flips and and teaches you to understand market structure and stuff. The problem with back testing is it doesn't teach you the emotion aspect of it. For example, how you act after you take 2 or 3 losses. Like sometimes I get so flustered, I'll take a stupid trade right after, and that's when I'll be like, okay, my trading day's done because I just did something stupid. Other times I'm just like, okay, you took a loss on a break even, go take the dog out for 10 minutes, calm down. And you have to, that's the difference between back testing and testing live. Now, if you're testing live with a real account, you're going to have emotions. Forward testing live, it'll probably do you better than back testing, but you're still not learning emotions and emotion control. And ultimately, to most guys that I've coached, it's not that they don't know what they're doing. It's that they're like any other human being and they let the emotions get the best of them. And like I battle this myself every day. And that's why I'll have a point where I'll be like, okay, you took 2 break evens, you took 2 losses, or you took 2 losses, you're done trading for the day. Things aren't working, come back the next day. When starting out and formulating a plan, is it better just to stick with the higher time frame and test entries on the 15-minute? Then once more confident, filter out and test on the 1 minute? I've never traded lower than 1 hour. I honestly, I'm going to be this, you might not like the answer, but if I was you and this is the style you want to learn, practice it the way you want to trade it right from the start. So if you're going to use 4 hour and 15-minute structure, start practicing entries on the 1 minute right from the start, because it might take you a little bit to figure it out. Why not start figuring it out right away? That's great if you can land a trade on the 15-minute and you got a 3R. That's not the goal of this. The goal of this to be able to execute on the 1 minute with 4-hour trend. So I would say start practicing that right from the beginning so that you can get better at it rather than waiting a couple months then going to 1 minute, because at some point you're going to have to learn it if you want these R's. The only time I'd say take your trades on the 15 minutes if you're swing trading. Other than that, I wouldn't use 15-minute for entries unless you're planning to hold this stuff, you know, for 4, 5, 6, 7 days, 14 days, whatever. And I don't know about yourself. I don't have the patience to swing trade. I need to be paid daily. And sometimes I leave runners on, but I just, yeah, it's not in my personality to hold stuff for 7 days. So hopefully that makes sense. Does anybody else have any questions? Whatever you're planning to do, whatever pair you're planning to trade, whatever session you're going to trade, like if you only trade London, backtest London. If you only trade New York, backtest New York. If you trade both, then backtest both. Like I backtest both on Sundays just because the people that join trade both sessions. But if you're only trading one or the other, literally trade how you're going to trade. What are your tips trading the A's session? Because I'm from Sydney. I would probably be looking at Australian and Japanese pairs myself. I actually started trading Tokyo Euro during Tokyo once in a while. Usually you get a couple of good trades a week. All I found with Tokyo so far, and this is only testing it on Euro, is it seems to always come to the extremes. As far as like any tips, I would, yeah, if that's all you're going to be trading, I would be looking at anything AUD, anything JPY. Bro, could you give some advice on back testing and making a trading plan? Well, essentially the trading plan just needs to be how you want to trade. Like how much are you willing to lose? How much are you willing to win? At what point do you stop trading in a day is what a trading plan is designed to do. What are you willing to execute? Are you willing to execute every trade you see, or are you willing to just execute the highest probability ones? Myself, if I'm down on the day, I'll wait for the high probability setups. If I'm up on the day and I have a little bit of cash to spare, like say I'm up 2% on the day, I'll go throw 0.25% on some trade that's got a low probability because I'm up on the day. And even if I lose the trade, I'm still up on the day. So the whole trade plan has to come from you and how you want to trade. I would just figure out how much can you lose in a day and how much can you handle before your psychology goes. So myself, like with the challenges, I was taking 0.5% trades, and I found that if I lost a couple of those, I kind of lost control. So what I did was I lowered my risk to 0.25% trades, and now I find that I can take more losses and keep my cool because the numbers aren't as big, and I actually do better. And whatever you have to do, you have to find a way of what works for you, and you have to find a way at what point you've lost control and you need to quit for the day. Some days that's 2 trades for me. Other days I can handle 5 or 6 and I'm fine. But at some point you lost your cool and you shouldn't be in the market because you're going to sit there and think you're going to miss all these trades, but I promise you're going to miss more losers than winners. So you just have to figure out at what point you walk away, whether it's winning or losing. Like if I hit 2 trades off and I'm up 15, 20 R on the day, you think I'm going to keep sitting at the screens? Absolutely not. Why would I? You'll just give it back to the market. What do you think about the concept of once in a while aiming to get a swing type of trade, but using the thought of low LTF entry and short, getting pips of a swing trade, but increasing our, yeah. So I do that with some trades myself. And what I do is I just partial out, make sure I get paid. If I hit my TP, I'll take like 60, 70, 80% of the trade off, and then I'll let the rest ride. I think that's a great idea because sometimes that little chunk you leave on for a couple of days, it'll go on and, you know, cover your next 10, 15 losses. But yeah, I do partial out and leave little chunks running here and there myself. It's absolutely a great thing to do. I just don't have the patience to hold, you know, the full amount for 7 or 8 days. I need to be paid daily. but that's absolutely a good way to do it. I'm hoping in the future I develop the patience to, pay myself 40 or 50% and leave a big chunk for days, but I'm not quite there yet. But that's kind of my plans for the future myself too. It'll never be just swing trading, but I want to get in on the 15-second or the 1 minute and turn it into swing trading after I paid myself. Because there's a lot of profits left on the table, right? And if you're pro daily or pro 4 hour, the swing trade should go. As long as you've taken money off the table, it doesn't matter if it goes to target or not. You just have to have a plan for paying yourself. So have a plan for losing, have a plan for break even, and have a plan for winning, how you're going to pay yourself. Everything needs to be planned. Like I took 2 losses today, but both trades were within my plan. Both trades combined lost 0.5%. Am I upset about the losses? Absolutely. But I followed my plan and that's okay. So as long as you're following your plan, at the end of the week, eventually things will start to compound. But yeah, just make a plan for everything: losing, winning, breaking even, where you're going to pay yourself. If you're going to hold a trade for 30R, maybe have a plan of where you're going to take partials. I have a friend from Britain, and he'll try to hold stuff for days without paying himself, and so often it comes back and hits his stop loss or hits his break even though he was already 20R in profit, and he's got a problem paying himself because he's greedy. Don't be that guy. Pay yourself for your time. You're better off making a little bit than making zero. The motto is to pay yourself. Anything else, guys? Like I'm here till 10:45 my time, so that's another 8 minutes. If you guys got any more questions, shoot them. Is it hard to get orders filled on the 1 minute when trading 6 or 7 figure accounts? No, it's not going to be at all. You won't notice that at all. The only time it's hard to fill your orders if you're starting to put in orders for 5, 10, 20,000 lots, and we're a ways from that. At least I am. If you're just looking to fill 100 lots, 200 lots, and 300 lots, they'll get filled. How many confluences do you need to enter a trade? Depending if it's pro trend or counter trend. If it's counter trend, I'll want a little more. If it's pro trend, I don't really need a whole lot. If I'm priced properly and I see a flip, I'll jump in. For FTMO challenge, do you suggest 0.25 or 0.5? I use 0.25 myself. Use 0.25, beat the challenge, use 0.25, build up your account. And if you find your psychology can handle more, take that number up. Myself, I'm at 0.25. Hitting the R's that we hit. I don't need to go up to 0.5. As my psychology improves, I might go up to 0.3, then 0.35, then 0.4, and then maybe eventually to 0.5. I did try trading 0.5s, and I found after 2-3 trades, if they didn't go my way, I was pretty much done for the day. And sometimes day trading, like I day trade 2 pairs now, so sometimes I execute 5-6 trades. Other days I execute 0, and I find trading 0.25% allows me to keep my cool most days. So yeah, stamina through 25. Yeah, I would say 0.25, man. And like I said, if your psychology can handle more, then add on to it. Most people I know trade from 0.25 to 0.5. Before going for taking a challenge, what are the things we should take care of? I would probably just try a couple of demos, and if you're doing well on those, you should be fine on your challenge, as long as you can keep your emotions in check. Because at the end of the day, anybody can formulate a trade plan, anybody can create a trade idea. The emotions get the best of us, myself included. I can pretty much go through every single week in the past whole year, and I can find you at what points my emotions got the best of me and I didn't take a trade because I lost 1 or 2 trades, and the third trade is the one that ends up going. So yeah, the challenge itself is not hard. Finding trades is not hard. Keeping your emotions in check, at least for myself, is the hardest one. As far as like POIs and formulating trade ideas, that stuff's simple. It's the psychology aspect, the management aspect, and the greed aspect. And that's the hardest part to control because we're all human beings, right? Thank you. Yeah, not a problem, guys. Thank you all for coming out. So we got like 3/4 of this session recorded. I'll throw it on my YouTube later for anyone that wants to review. When we do the Q&A next Friday, if I haven't started recording, just remind me from the beginning, guys. And I like to throw these up every week. Yeah, today I just forgot. Thank you for your time. Yeah, man. I hope this helps everybody out. And yeah, if you got more questions, write them down. There will be another free Q&A the exact same time next Friday, and we'll do them again, and we can go through the chart. And if you guys have a chart of your own that you drew up and you have a question, I have no problem with letting you guys share your chart too, and we can discuss what you did. So if you guys want to do that for next Friday, that's totally cool. Get your chart ready. I'll let you share your screen and we can go through it. Whatever you guys want to do. Yeah, that's totally cool. Well, if we're going to end it here, guys, that's totally cool. I'll see you all next Friday. And yeah, get your questions ready, get your charts ready. And I have no issues with letting any of you guys share your chart. Please upload it. Yeah, this will be up in the next couple hours. It'll definitely be uploaded. Don't worry. I'll throw it on my Instagram story when it's up and running, and give it a couple of days for YouTube to process high definition. They're a little slower with that these days, but it'll eventually be high definition because it'll get uploaded in 4K, but YouTube takes up to a week sometimes to make it HD. I don't know why, but yeah, I will get this uploaded, and you guys all have a good weekend, and I'll see you guys next Friday.